Now, let's cross over to London, where Juliana Olayinka is standing by to tell us what's happening this morning. Good morning, Juliana. So let's begin with the IMF suggesting the UK and the EU should extend the period to negotiate post-Brexit trade talk and not to add to uncertainty from coronavirus. Is this call likely to hold water as long as Boris Johnson and his team is concerned?
Well, in short, Bissy, the answer is no. But if you speak to most economists, they think that is likely to change. At the moment, all post-Brexit trade discussions between the EU and Britain have been taking place via video conference calls. That kicked off at the beginning of this week after both chief negotiators fell ill due to the coronavirus. They have scheduled a series of discussions which will take place over the next 3 months, but it seems to be a growing cry from both sides that these discussions are ridiculous. And what's been added to that cry is the IMF chief just basically warning that she does not want Britain and Brussels to add to the market uncertainty by not extending these post-Brexit trade discussions, which are due to end at the end of this year. Now, one of the issues that we have, of course, is that Prime Minister Boris Johnson won on a mandate of getting Brexit done. This was one of the issues that his predecessor, Theresa May, had, because, of course, under her, the Brexit extension was extended 3 times. And this is exactly what Boris Johnson didn't want to do. As soon as he got that whooping majority, one of the first legislations that he passed was not extending the deadline past the 31st of December. So at the moment, it is enshrined into law. But like I said, a lot of economists think that once the COVID-19 pandemic really starts kicking in and hitting the British economy, as all of the data suggests, and perhaps in late June, Britain may soften its rhetoric on not extending.
Away from the Brexit talks now, local pharmacies seem to be facing a cash crisis. What exactly are the issues here?
Well, there are major issues, Bissy, surrounding the COVID-19 pandemic, and everybody across Britain will know that accessing your GP, your general practitioner, your local doctor is virtually impossible at the moment. They're asking people to stay away, and because of that, there's increased pressure on local pharmacies. You know, they're seeing a lot more people. Usually there are some prescriptions that you'd have to go to a doctor to get before it goes to the pharmacy. It's going straight there. And many of these practices have written to senior officials within the industry saying that they're under increased pressure and they're struggling with cash because wholesale prices are increasing. They're also increasing the amount of staff that they have to man their shops purely because so many people are coming in. They also do not have the personal protective equipment, which is a huge discussion point in Britain at the moment. That appears to be going, of course, to frontline health workers in the NHS, and secondary are care workers. But now they're asking for this equipment, and at the moment they've been paying for it themselves. Now, last month, the government did give these practices about £300 million in advance payment to help them with cash flow. And that payment is due back at the end of next month. But there are concerns that if this payment does have to be given back, then many of these local pharmacies will have to go under. They just basically wouldn't be able to survive. And of course, that can't happen because there are millions of Brits around the country that are relying on them because they cannot get to their doctor.
The Financial Conduct Authority has ordered insurance companies to pay out claims to firms as soon as possible or explain themselves to the watchdog. The insurance companies, of course, must be overwhelmed with claims at this time, right?
Well, you know, the insurance companies are overwhelmed, and unfortunately, millions of people who have insurance policies, COVID-19 or a global pandemic is not written within the small print. I think the FCA, the Financial Conduct Authority, the watchdog that regulates the markets, they are aware of that, but they're not happy with the way insurance companies have been dealing with individuals. A lot of businesses and people have been complaining that they're writing to their insurance companies just asking basic questions and they're not getting any response. So the FCA has conducted an inquiry into this, and they've written an open letter basically saying that they need to do much more. I think this mainly pertains to a small, well, it's quite a large business insurance scheme called the Small Business Interruption Scheme. And so if your business is interrupted, as many are, of course, for a minimum of about 3 months at the moment, you could be entitled to some insurance. Again, with many of these insurance policies, a global pandemic is not written within it, but the FCA just wants to ensure that insurance companies are at least compliant to some sort of conduct at the moment. So yes, insurance companies are under increased pressure because millions of people are not able to claim on items that they otherwise would have been able to.
Many thanks, Juliana, for this update. We'll see you again at 1:30.
Thank you.
Well, let's bring things back home now to the debt and currencies market. And Michael Obimbe is here with us to talk to us about the activities. Bosu Obimbe, rather, joins us now for activities yesterday. Good morning, Bosu. So we saw that the bonds market recovered from the distractions of the Dangote Cement 100 billion naira bond yesterday. But, of course, the reverse was the case for the OMO maturities. Give us a sense of what actually transpired.
Yes, good morning. Thank you for having me. So yesterday, as the Treasury space, the market opened on the price note. Attention was focused on the PMA auction yesterday. So we didn't listen to much activity. It was towards the end of the close of market that we saw a demand on select medium and long-term OMOB and NTB. So at the at the GMA rollover a total of 58 billion. So as expected, we saw stock rate decline by 30 basis points on the long day. So on average, we saw a 34 basis points across the standard tenor. So in terms of bonds, the we have a robust system liquidity is over 600 billion currently. So that's why we've seen the bullish trend, both even in the equity market, we've seen the bullish trend. We've seen it on the bond space as well. So we saw the yield declining by an average of 11 basis points to close about at 10.64 yesterday. Today we have an option. So we have a maturity of about 195 billion that is maturing to the system today. So CBN has floated an normal option 5 billion each of the 82 and 166 days, while we have a 90 billion from the 34 BB. So we expect stock rate to actually decline on the long end. The last OMO auction, the stop rate on the long end closed at 2.79. So we expect maybe for it to close at maybe 12.5 rather. So we expect the demand to be what we call to be heavy on the OMOB, at least on the long end. Because of the unmet demand that we saw at the NTB space yesterday. Like I said, it was fully oversubscribed, so we expect the unmet demand to filter into the market today.
All right, in 1 minute now, Bosu, please answer this now that at the FX and the I&E window, of course, we saw traded volumes just around $38.61 million. Does that actually affect a recovery in the Naira?
So for the investor and exporters window, what we've seen is a decline in the flows of funds from the foreign investors as a result of the lockdown in major cities. So, like in London, I think an extension is expected. So, what the inflows we've been seeing currently has been from the exporters and from non-bank corporates. So they've accounted for about 50% of the total flows coming into the market. And if you look at the demand is still quite high. We still have a lot of customers trying to get to their trade obligations. So that's why we've seen the turnover. Even yesterday, we turned over $8 million compared to the previous day. We expect this trend to continue until maybe there is vaccine to this COVID-19, or when this lockdown is there's a reduction in it globally.
Fixed income dealer at Access Bank, Bosu Obimbe, thanks for your time. And that's where we wrap up today's show. Thank you for watching. I am BC Adebayo.